Good morning. Testing, testing. 1, 2, 3. The rain in Spain falls mainly on the plains. Ni hao ma. Jumbo. Ohio. Good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Wait, I got everything in the wrong spot. Hang on. Whoa, don't do that, dude. Now, did I mess all that up? I probably messed all that up. Hang on. What? There we go. I guess that'll work. All right, this has to go over there. This has to go over there. All right, that's a little bit better. So why would we plan our trades in advance? Well, we want to lower our risk because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader like you. Cup of the day. Don't be a hole. That's some good coffee. It means it's going to be a good trading day. That's a good omen. So I think we're going to look at the stock market today. We had a big move yesterday. Will it stick? Or will it be rejected? Well, that is what's going to impact the currency markets. Will we get a debt ceiling agreement today before the close? No, probably not. After the close? Yeah, maybe, but then we won't be able to really trade that till next week. So it'll be interesting to see what happens. Okay, maybe a relief rally, maybe not. I think it's going to be an interesting week next week, and actually the rest of the rest of the quarter and the rest of the year, and even next year is going to be very interesting for trading. And I think what usually happens in a scenario like, let's say next year the Fed cuts interest rates. I've been thinking how we may get the exact opposite of what typically happens when the Fed cuts interest rates, and it'll be kind of interesting. I'm in the camp, by the way, that not only will they not cut interest rates this year, I don't think they're even going to cut next year, and they're going to err on being way late again. You remember how way late they were to raise interest rates? I think they're going to be way late cutting interest rates. Why not? It seems to fit, right? So anyways, I think we're going to have a very interesting couple of years, and I'm glad to be trading with you. Together, I think we can survive, maybe even thrive. Now, in the description below the video, there are some important resources. There's a link to my book. Please leave a review. The book is well over 10 years old now. It's still applicable. I still trade the same way with the same charts. It's still a great use of technical analysis, fundamental analysis, and trader psychology. I do plan on writing 3 more books. I already have them in my mind. They'll be shorter books, but they'll be cheaper books. So if you can leave your review, that'll be great. Gee whiz. Lucas says, well, we all need a mug like that, huh? Yeah, I bought it hanging out with one of the Jonas brothers. I was locked in a small space with him. Which one? I don't even know. There's the one that's not a singer, so he's not even in the band. And then it was the other one. Anyways, so there's plenty of Jonas brothers. One of them was in Atlanta. Anyways, so the next thing, well, first of all, please leave a review on the book because I don't know, it'll inspire me to push through writing more books. Writing that first book, I got carpal tunnel syndrome. And I was in pain. I haven't been in pain for a while, so lucky, fingers crossed. But for years after writing that book, I had pain, physical pain. So if it doesn't pain you too much, could you leave a positive review? The next thing is I'd like to invite you to join FX Bootcamp. It's $88 a year. It'll make a difference, I promise you that. You can also upgrade your account to access some of the live trading groups. We met for 3 hours and 15 minutes yesterday. I thought it was a pretty good meeting. We broke it into 3 parts, part 1, part 2, part 3. Cool. So feel free to join. One of the tools that I use from time to time in these live streams is a tool called QuantBox. It sits on the Google Cloud and it pulls macroeconomic data from websites all over the world, organizes the data, scores the data, ranks the data, does comparative analysis between assets and economies, and spits out a bias. Very bullish, very bearish, bullish, bearish, neutral. Very cool. In the description, I think you'll also find a link, not just to quantbox.co, but to a video, a recording of a webinar in which I teach you how to do everything it does. I teach you how to do it for free and where to get the data. I think it's a good presentation. Honestly, you will learn how to do macroeconomic and quantitative analysis yourself for free. Okay? Or you can pay a little bit of money and automate it. It's your choice. There's a link to tradersway.com. We all need a broker. Traders Way is trustworthy. Traders Way is ethical. Traders Way has fast execution speed. Traders Way has competitive spreads, which means they're affordable. They're not the cheapest because they're not lying to you. I would guess every broker that claims to be the cheapest is really ripping you off behind the scenes. Most likely slipping you on half a pip in, you don't even notice. And then they slip you a half a pip out and you don't even notice. Well, that's a full pip on top of what they say they're charging you. So, and you're like, Wayne, well, that would be wrong, illegal, or stealing or something. And well, some of the biggest brokers in the world were audited by the regulatory authorities and found out not only are they doing it, but it's actually built into the execution engine. And what the regulator said is, hey, you should tell people. So they put it in the documents, which you probably don't even look at. So I don't believe Traders Way does that. They also pay you really nice swaps. Okay? Yeah. So anyways, tradersway.com. All those resources are made available to you. I think you should check them out. Ba-ba-ba-ba. $3 billion rounding error, huh? Anywho, dollar's still relatively strong. Yen is still relatively weak. Everything is right in the world. Pound, look at the volatility in pound. Up, 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 down, down. Up, up, no higher high, down, down. Maybe a higher high today. Maybe an Aussie, Euro not doing it. So we have Aussie, Kiwi, CAD, all commodities rallying up. We've had the biggest week in oil in many months, if not a year. So I think we should look at gold, oil, and Bitcoin today. In fact, why don't we do that now? Okay, here's the my WTI, and it is having a great week. Okay, we're kicking off my support line. Okay, then remember doing this. I mean, what was it, 2 days ago? Yesterday? I think it was 2 days ago. It might have been yesterday. I said wait for the higher high and kick it off the moving average now that we're above the moving average. How many people agree with that? That's what was said? Does anybody remember? I said, now that it's above the moving average, you had to wait. Now it's above the moving average. That's why we have the moving average. Yeah. So anyways, it's working out. We have not really gotten above this zone yet, but it's plausible. Goldman Sachs is predicting $100 a barrel. Okay, but you can see there's a big technical change. This has been below the moving average, since early April, I believe, and for the first time, that moving average is acting as support. Okay, not resistance. So this could be important. What happens today is important. Okay. Okay. Cool. So it matters, right? It matters. Gold, I'll have to zoom in a little bit. We kicked off the all-time high, and a bull is going to try to buy this. Now, why would they do that? Because they're a bull. I think the psych level's in play. Okay. Now, a move like that would work if the stock market comes back down today. Remember, yesterday was a big up day. When you look at the NASDAQ, it was a huge up day. But the breadth of that move was very, very narrow. So imagine you're looking at 100 stocks. And on average, the stocks jumped, we'll say 3%. The whole index of 100 stocks jumped 3%. But what if only 5 what if only 5 of the 100 was 80% of the 3%? You're like, wait, what? Yeah. So to say 95% of the companies only accounted for basically a 0.5%, and the other 5% did the 2.5% of the move. You know, like what I'm trying to say is it really didn't happen, statistically speaking, that there should be a different index like the FANG index. And you remove all of those from the S&P 500. And if you did, what you'd find is very little actually happened yesterday. If you strip out people that companies that tend to talk about AI and cloud. I think there's a lot of dumb money going into this stuff right now. They have good intentions, but poor brains. And there'll probably be a disappointment down the road. Venture capitalists are terrible at stuff like this where it's hard to raise venture capital, but as soon as there's like a theme, like it used to be crypto, people would walk in and they're like, yeah, we're going to do something crypto. And they're like, we're interested. We're interested in investing. Now I'm sure the entrepreneurs are walking in. They're like, we're doing AI. Oh, we want to do AI. Tell us about what you're doing. Okay. Anywho. So we got to recognize that we are on support. Okay. No, it's not that, but yeah. Yeah. Yeah, it's not that. I think it's the ghee sometimes gets in there. So after a year of losing weight, I weighed myself again. So it's been some time. And this morning, I'm happy to report 159.8. And I was 200. So you're like, oh my God. So I kept it off. Had no idea. That's exactly where I was months and months and months and months and months and months and months ago. Haven't weighed myself since. Stood on the thing and I'm exactly the same weight. You're like, whew. Nice. Yeah. Thank you. Yeah, 40 pounds, man, dude. But to keep it off, that's great. Lovely. Yeah, there is hope. Now, the interesting thing about the near future, in fact, the near future is actually already here. You just take a pill. That's it. Yeah, what about yen? Okay, tell me about your thought, Joseph. What should the current policy of the Bank of Japan do to the value of the Japanese yen? What's your outlook? Talk to me, Goose. Tell me about the Bank of Japan, Joseph. Yeah, Darko, one step at a time, right? Joseph. Come on, Joseph. Joseph. Come on, Jose. Hello. People is funny, huh? What about yen? Oh, there we go. Seems to me that yen should be getting stronger even with the recent decisions. Well, the Bank of Japan is actively weakening the yen as part of their qualitative and quantitative easing program, which makes Japanese products and services more attractive to foreign investors and more competitive to China. Okay, Joseph. So I might disagree with you and suggest that YCC is designed to weaken the yen. Yes, it is, Peter. All right, so anywho, looking at Japanese yen now, the standard strategy here is here to here. In fact, the there we go. The interesting thing is we hit target on Aussie yen early in the month, which predicts that we go down to here, and we did. And then it resets. But the monthly trade was over very, very, very quickly. Okay. Then I had this in a toit range. As you can see, I have it here. There was a breakout of the range, a pullback, and now you're riding the moving averages. And it's a Friday, and we are in a cluster, a confluence. And this confluence highly suggests that you take profit. Okay? So Joseph, if you're looking for yen strength, it might occur at the end of, let's say later today or maybe Monday. I don't think it's actually yen strength. I think it's Aussie yen profit taking. But nonetheless, it might feel good on the whole. And then, next week will probably be something like that. Joseph says, okay, thanks for that info. I'll take a closer look. Have you read the policy on yield curve control? If not, I'll point you in the right direction. Lovely. Yes, you're ugly, with your smile so worn and your teeth so green. Well, they move things around. Oh, they've moved it up. Huh, they moved it. They moved it. This must be it here. Quantitative and qualitative monetary easing with yield curve control. Yeah, there's enough information in here. Okay. Yield curve control has brought about improvements in economic activity and prices mainly through the decline in real interest rates, and Japan's economy is no longer in deflation in the sense of sustained decline in prices. You know what that means? Falling yen. Inflation overshooting commitment. The bank commits to continuing to expand the monetary base. They're printing yen, if you want to look at it that way. Okay? And then what are they doing with it, Joseph? Now that they print the yen, what do they do with it? Well, trying to find a chart here. Gave me the wrong chart. Hang on, I'm looking for something. Boo, 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 boo. Okay, we got to go back a little bit. Sorry that took so long. I didn't find a good chart. Okay. They are keeping, I guess I got to go, that's too much. Let's go back weekly. Okay. They are keeping interest rates below 5.0. So when interest rates get too high, they buy the Japanese 10-year note, the JGB. They buy the 10-year JGB, and they buy unlimited amounts. Okay, Joseph? So the reason they're printing money, if you want to call it that, they print some money, which devalues the yen. They buy the JGB with the money and keep yields lower than 5.0. And you can see very specifically it's worked. And this is all in their press releases. They've all declared that when price gets here, they buy JGBs. Unlimited amounts. Think of it that way, Joseph. They buy unlimited amounts of bonds. So they're willing to create unlimited amounts of yen, which will create Japanese yen weakness. The other thing they're buying, because now they don't need to buy JGBs because we're at 4.0, not 5.0. So the other thing you could do to weaken the yen, which creates everything that is in that policy, okay, they can buy the stock market. With their Japanese yen. And this is the Nikkei, and they own something like 60% of it. So it's like one of these things, Joseph. I'm not saying the yen won't get strong. I'm just saying, what is the logical outcome of this policy that is active every day? Who do you want to trade against? Do you want to trade against the Bank of Japan? You could, but I'd rather you trade with the Bank of Japan. So when somebody says, oh, I think the Japanese yen is going to get strong, I'm like, why? Help me understand. Have they changed their policy? No. Okay. Nope. So like one great example, the last time we had a Bank of Japan meeting, I took the opportunity to share with boot campers the impact of the meeting. So now I got to go to a smaller time frame. And in the meeting, right here, this is when the meeting was. And the Bank of Japan said they have no intention of changing yield curve control, that it's still the center of their monetary policy. So I said, oh, sell yen. Okay. To give you a sense of how much this is right here, 400 pips locked in of profit. So I was up well over 500, almost 600 pips so far. And all I did was reaffirm yield curve control right there. That's all it was. YCC. There wasn't any real technical analysis there. It was just in that moment, they said, we're not going to change YCC. We're not even thinking about it. Boom. Okay. Yeah. Okay. Greg says, the $64 million question is, how long does this continue? Well, I would throw the question back, Greg, and what would stop them? Greg said, a war. Well, would they create the war? Okay. Anywho, so you can do some comparative analysis, for example, and you could look at dollar pairs and see how out of control. Let me zoom in. Okay. There's only 3.5% inflation right now. You see that? Okay, it's only 3.5. Does anybody remember inflation level in the UK? Well, let's take a look at that. So for that, let's go to yen pairs and compare the UK to Japan. Okay. Look at, 10% inflation in the UK and only 3.5 in Japan. And we're like, how long can they do this? A lot longer. Because England's not doing yield curve control and they have triple the inflation. You're like, oh my God, right? So I guess I wouldn't fight it, Greg. I'm not even disagreeing with you, but the issue is timing. When do they stop is basically your $64 million question, right? Not anytime soon. the $164 million question is, how do they reverse it? And I don't think they even can. So is this the Titanic staring down the iceberg? Yeah. Yeah. Anywho. Oh, and by the way, let me bring that back up. Back up. I'll log out here. You should try this out, guys. Try it for a week for $8. Okay. $8. Pfft. Come on, bro. Come on, bro. $8. All right. Yo. Hey, you know this kid? I said I didn't, but he did. Okay. What's going on? Nothing's right. I'm toned. So here we are, MR3, and statistically speaking, I would expect that this up is near an end. So maybe this gets to 1400, but probably not. And what I would suspect, at least on the short run, right, is something like this. Oh, Greg, you're absolutely right. I mean, you're absolutely correct. Right? So that's what I'm saying is it's all a timing issue, right? I would suspect, Greg, that the yen is the first fiat currency in modern history to fail. Not this year, not next year. But it'll be an interesting part of our modern history. Yeah, it'll be, but remember, not only is it the currency would be the first to collapse, but their economy is unsustainable, and they're facing major problems. The world is not growing anymore, and Japan is shrinking. China is shrinking. India is flat. United States is shrinking. The UK is shrinking. Canada is shrinking. Australia is shrinking. All of Europe is shrinking, population-wise. And that's not good if you believe in sustained GDP, for example. You can't be more productive with less people. Unless you have robots and neural networks working and thinking for you. And Japan led the way of that a million years ago, where, even in the 1980s, if you visited a Toyota factory, you're like, oh my God, there's robots everywhere. You just have to watch that movie with the guy that did Batman. Oh, but there's so many guys that did Batman. Gung Ho. Does anybody know that movie? It's an American film directed by Ron Howard and starring Michael Keaton. The story portrayed a takeover of an American car plant by a Japanese corporation. Yeah. And of course, because it's American, they named it with a Chinese saying. Gung Ho is Chinese, so they're like, let's do a movie about Japan and use a Chinese phrase. But anyways, that's the American way. They're like, same thing. What's the difference? Right. What's the difference? Oh my God. So anyways, we got to watch this one. What I was talking about earlier is a very, very small amount of the companies in this index actually went up that much, let's say, even close to that much. That 90% of the companies in this index did not do what this is suggesting. Which is kind of interesting because we're trying to track money, not necessarily trade the index. We're trying to track the money. Okay. So anyways, so I want to watch that. That was the NASDAQ. Today also S&P 500. And we have tested the upper bounds of this range. And yeah, the lower bounds are 1,000,000 miles away. So is this the high? You know what? I don't know. But I can tell you in my decision-making process that in this area here, and it was still on the way up, so actually that's not quite right. Somewhere around here, okay, I moved my portfolio to be, let's say, neutral to bearish, where I'll benefit less if it goes up. I'll benefit, it'll be fine. But really, it's designed to say, well, if this heads down, will my risk be as low as possible? Think of the psychology there. Okay? Well, that could be true, Richard, and it might, like it makes sense. But what if the Fed says they can't raise interest rates? They acknowledge inflation is very high and is likely to remain high because they look at supercore now. But the market is so fragile that they can't raise interest rates anymore. They've already killed the economy. And that they're really worried about the near future. That's not a good narrative, Richard. Even though they're no longer raising interest rates, that might actually be bad news in sort of the longer run. Okay? If the Fed says when they look at their leading indicators and their models, it suggests the United States will go into recession now. That's why they're not going to raise any further. That the banking system is already broken. Commercial real estate is already broken. And there's enough going on. That their work is done. They've broken the economy and we will go into recession. Well, that's not necessarily going to make the stock market rally. You know what I mean? So I agree with you, but not at the same confidence level that you're displaying, you know what? Well, you know what? Let's deal with it when we get there. Okay. This is the number of people on unemployment. Okay. It's high, stable, but we can look at initial claims. Okay. Zoom in a little bit more, maybe. Okay. Look at this. Up and up. September, November, January, February, March, April, May, June. Look at this spike. Boop, boop, boop. These are people losing their jobs. No longer, it's not included in non-farm payrolls. Non-farm payrolls, the two surveys that they do are completely independent of this. This is people saying, I lost my job and I need some unemployment benefits. Richard says Chairman will give us a hint later today. No, he won't. No, I don't think so. I think everybody wants Ben Bernanke to say Jay Powell's crazy. Or that Jay Powell misread everything, was way too late to raise interest rates. And then they're going to say, look, they raised interest rates and they were still doing quantitative easing. Why couldn't they just immediately stop quantitative easing? What if they left interest rates at 3.5%, but did quantitative tightening aggressively? That we wouldn't have been in a banking sector problem. There's a lot that they're probably going to try to get Ben Bernanke to say that Jay Powell has done a very poor job. But of course, he doesn't want to say that. Okay? But so here's like a leading indicator, for example, where unemployment is rising, but not counted in non-farm payrolls. So you're right. So is this a sign that since the beginning of the year, the economy is starting to slow? Gee whiz, come on. There we go. Okay, new houses. Goolsby, yeah. Well, one of the things we talked about, I think Johan said it yesterday in the swing trading meeting. He was quoting, I don't know, Gandhi or something. Right? Like, nothing happens until it happens, right? Like, I forget the exact quote and who actually said it, but it's like, everything is slow to react, and then something snaps, and then there's a quick reaction, right? But what are you looking for? Non-farm payrolls or initial jobless claims, right? This is like, why are housing companies not building new houses? There's a shortage of houses. Right? Okay. Again, let me zoom in to where we are now. Oh, there we go. That might be too much. Let's just... guess we have to see. Okay, this is where we are. Look at all the money that the government gave us. There's your inflation, by the way. What did you do with it? Well, you had two choices. Consume or invest. Okay? The vast majority of this money, according to Bank of America, went to bars and restaurants. Yep. That's it. That's where the inflation came from. By the way, do lots of YouTube live streamers create their own charts using Fed databases? Maybe they do now. So I want to watch this really close. Okay, so I want to re-enter a bunch of trades. I'm in a sell zone right now to sell Aussie dollar. So I'm shields up, red alert scenario. I'm looking to sell, and I got the right price. Lovely. CAD I'm staying away from. Euro, once again, very interested around this 108 area where we is. Okay, so you can see I've marked my lines and everything. So that gets really interesting. There might be a sell coming there. Pound dollar, very interesting price. Okay. This is all good. Remember, if you were a member of our swing trading group or day trading group, I went over all of this yesterday. And remember, what we talked about is up and then down is the plan. And if it don't do that, then that's also informative. So I have the right price. I don't know if it's the right time, but the price on the right is okay. So now I got to drop into a smaller time frame and find my motivation. Okay? And Kiwi, you can have it. I'm not interested. All right. I was short on Tuesday, got knocked out at break even Wednesday, didn't look at it again. It's done. Okay, so anyways, oil making its higher high, just lovely, lovely. And again, that was all designed and outlined already. Look at the pivots. Okay, those are price action pivots, by the way. Bitcoin is still not helpful, and despite all the volatility, hasn't really actually done anything interesting. Just farting around the median. Okay, nat gas at a profit-taking zone. Many of you boot campers are short at this price, or I mean long at this price. It was part of the oil trading course. I know several of you actually took the trade, so I know several of you are long. Okay, from back in here. And if you are lucky enough, if you are brave enough, you hold this and go all the way back up. All the way, dude. Okay? All the way up. And let me talk about this just slightly. The trade that we set up is European nat gas falling and US nat gas rising and converging based on the law of one price. Well, this actually doesn't work in the natural gas industry. It works in the oil industry. But the idea that the United States is producing more oil than it ever has ever, part of that process gives you nat gas. So you're getting the nat gas. And with the nat gas, they are exporting. Okay? Does anybody remember the catalyst? 6 months, at least in advance, that we discussed the catalyst. And then on the exact day the catalyst occurred, we discussed it. And I shared with you, here it is. There's the thing we've been waiting at least 6 months for. It just occurred. Freeport, thank you. Freeport. And that has to do with the intra-market spread. Actually, it's an intermarket arbitrage. Dakar says, I have not seen any Fed members say it's time to pause. Yes, I've been saying the same thing for days now. They're not saying it. We have several people speaking today. Okay, so Freeport is a natural gas export facility. And there was an explosion that took it out of commission. And the idea was that when it reopened, the price of American natural gas will go up. And the price of European natural gas will fall. Now you're like, huh. That's weird, right? Well, the thing is, because Americans couldn't export as much natural gas as they could because Freeport was down, then the supply of natural gas in the United States went up relative to what it would be. And when supply goes up, price falls. And so now if Freeport, that's not right, is it? That's not the right one. So when the facility opened, they could suddenly sell natural gas to Europe at European prices. And that's the arbitrage. Cheap American natural gas right? Selling at American or at European prices. Okay. So anyways, yeah. Trying to get like a date somewhere. Because there's Google's not doing a good job today, or maybe I can't talk and search Google at the same time. Okay, I guess this is it. March 23. Freeport said it's targeting initial production at the facility. Okay, so March 2023 is what we were waiting for that announcement. We started in July, by the way. So let's do March is in here, right? And in July, we were already waiting for it. So way out in here. Okay. Wait for it, wait for it, wait for it, wait for it, wait for it. And right in here is when the arbitrage kicked in. Okay. And right, so then you wait. You wait, 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 you wait. Okay, bam, 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 bam. And somewhere in here, right, boot campers went long. And again, it's the convergence of high European prices with low American prices. So what'll immediately happen is European prices will fall because suddenly they're getting cheap American gas. So European prices fall, but now American prices rise because they're getting high European prices, right? So if Europeans were paying like 50, okay? And the United States had it at 2. Like crazy difference, right? So Americans could go to Europe and say, oh, well, right now your natural gas is 50. What would you buy mine at 25? Yes. So European prices would fall from 50 to 25, but then American prices would rise from 2 to 25 or closer to it. You see? And that's how that arbitrage makes sense. Now, what I care about is I did that as part of our training course in the oil course, right? The oil training course. We covered the arbitrage and we knew exactly what the catalyst would be, but not when it would happen. So you had to wait for the catalyst. And that's the beginning of March. So I don't know exactly what day that came in, but you can see if it was closer to April. Okay. So, yeah, I guess enough said, right? Enough said. Anywho, I don't want to search this anymore. Cool though, right? Yeah, well, it's because they don't want people trading it, right, Darko? Jim, well, first of all, I don't know how the market's going to react. Jim's question is, if there's an announcement about a debt ceiling resolution over the weekend, how would the dollar respond? Well, I don't actually know, but what I would assume is that it's a relief, which is less risk. It's sort of like going to the hospital. There's something wrong with you. And the doctor comes in and he's like, well, we're not sure why you feel so bad, but we can rule out cancer. And you're like, oh, wow, that's a relief. But it doesn't change the fact you feel bad, right? So I would imagine if that means less risk, that means more likely to accept risk, and that the stock market would try to make a higher high on the way to 44, and the US dollar weakens. Okay. Okay. Maybe an opportunity to get short. Maybe. I took profit, Jim. Okay. Yeah, I put 600 or 700 pips in my pocket, went neutral, except for my yen trade. Okay. So I have my 2% for the month. And, you know, I still have a week or two to go. So I don't need to be too desperate. Boop, 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 boop. Well, Jim, maybe, but that also sounds fearful. If you have the trade, take the shot. Okay, but maybe don't do 5 trades all at once. Okay, but remember, all these trades I set up last night, and they're all working. I'm like, dude, are you a bear or not? Okay. Right now, the dollar's behaving like the S&P 500 is going to be rejected. Yeah. I know, right? So let's see where we stand. Okay, oil yields, NASDAQ, S&P 500. Okay, they're all on the upside. Okay. But if we go over and look at our scatter plot here, CAD yen's up and it's supposed to be, pound yen is up, it's supposed to be, euro yen is up, it's supposed to be, Swissy yen is up, it's supposed to be, USD ZAR is up and it's supposed to be, Aussie yen is up and it's supposed to be, Kiwi Swiss franc is up and it's supposed to be, Kiwi yen is up and it's supposed to be, Kiwi CAD is up and it's supposed to be, Aussie Kiwi is down and it's supposed to be, pound Kiwi is down and it's supposed to be, Euro Kiwi is down, it's supposed to be. Euro Aussie is down, it's supposed to be. So right now it looks like sort of these are the ones that we might be looking at for the next trades. And they're going the wrong way. Quantitatively speaking, these should be down. So you might want to look at Aussie CAD for tomorrow as an example. Boop, 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 boop. Okay. And there's the future setup. Let me drop into a 4H. Okay. See, it's up now. And QuantBox says, yeah, no. What do you think of that? Isn't that lovely? Isn't that what you're supposed to be doing? If there's something that's bearish, aren't you looking for a lower high? And right now, so you're looking for green candles in a red trend. And QuantBox does that for you in a second. You can find the ones to be looking at. Think about that. Instead of burning through 35 different charts, looking for something to do, and you will always find something to do, but it's random, versus finding the one thing at that moment that seems to be out of position. You want to be selling upward price action in a downward trend, don't you? So now you're like, oh. So maybe that's a trade for later today or tomorrow. What do you think? Isn't it nice to spot that in less than 1 second? You're just like, boom. Oh, look at that. Out of position. Aussie CAD up, trending down. Huh? Isn't it crazy that right there could probably save you, what, a half an hour to an hour of time? Right there. It just saved you an hour of just burning through charts looking for something to do. Well, you're always going to find something to do because you're shopping while you're hungry. But you're not going to make good choices. Oh, God. That was awesome. Back the truck up, man. Holy smokes. That is amazing. So, I think I gotta go. I think that's it. I think we're done. Okay. Oh, you're in Freeport grind? Totally. What are we going to do? Tell me all about it. What are we going to do? Everybody party at Freeport. Yeah, change the world. Hey, man, I'm all over it. So, peace on earth. Peace on earth. May the pips be with you. May your profits be above average. And with all sincerity, thank you for being part of this community with me. I do believe we make the world a better place. I really do. This thing called Forex is a tough gig. It really is. But it's easier together. And I appreciate this community that we have. I appreciate the positive energy that you contribute every single day. You guys are loyal, good people. Right? So anyways, thank you for being part of Forex.Today. And have a wonderful weekend. And I will see you, well, if you're in my day trading group, I will see you on Sunday. Ciao. That just happened. Wah, wah, wah.